Hello, fellow Ag Nerd, and Happy New Year! Where is agriculture headed in the future? That is the premise of this podcast, and even more so, today's episode. For the third year in a row now, I contacted hosts of 7 different ag podcasts out there to see if they would identify one of their episodes for me from this past year that they think is most indicative of where the agriculture industry is headed in the future. Yes, that's something we talk about here every week, but I find these different perspectives from different ag podcasters to be one of the most valuable episodes of the year, so I've gathered them all for you here for the third time in a row. So last year and the year before, I contacted the hosts of these podcasts, and once again, they all came through. I'm really excited to share clips with you from these 7 different shows. Now, some of the themes are similar to what we've heard in years past, like genetics and artificial intelligence, which I actually think is a very good sign. I mean, if the themes changed every time I did this, it would probably be an indication that we were wrong in the past, right? Because those trends were actually fads that came and went. But there are new themes as well this year that I think you're also going to find interesting. If you're hearing my voice for the first time, my name is Tim Hammerich. Every week, I get to sit down with the farmers, founders, innovators, and investors shaping the future of the ag industry. And before we dive right into today's episode, we have just a couple important caveats that I think you need to know before you listen. Number one, there are a lot of ag podcasts out there, and I don't necessarily listen to all of them. This episode is not about selecting my favorite podcasts in the space, although I do really appreciate each of these shows. I selected these 7 specifically because their topics and themes most overlap with the themes we discuss here on this show, on the future of agriculture. And those themes are ag technology, business and economics, sustainability, science, entrepreneurship, or some sort of mix of those things. So if you don't like that some of your favorite ag podcasts aren't mentioned here, and inevitably I get somebody who says something every year, it's not because I don't like them. It's not because I didn't think they're good shows. Nothing like that. I just selected based on theme and the fact that these 7 seem very forward-looking and have the most overlap with FOA. If you think that there are others out there with a lot of overlap and you want them to be considered for next year, happy to entertain an email on that, but it really isn't about favoritism here. Secondly, I did have to cut down these clips quite a bit to fit this format and keep the episode from being too long. My number one recommendation to you is to go listen to each and every episode in their entirety. See if you like the show, follow, subscribe if you do, and I'm going to leave links in the show notes where you can do that easily. All right, so here are the 7 podcasts you're going to hear from today in order of appearance on the show. First one is Business of Agriculture by Damian Mason. Then AgTech So What by Sarah Nolet and her team at Tenacious Ventures. Then the Regenerative Agriculture Podcast by John Kempf and the team at AEA. Then Fresh Takes on Tech with Vonnie Estes and the team at the International Fresh Produce Association. Followed by the Pacesetter Podcast by Joe Mosier. The Modern Acre Podcast by Tim and Tyler Nuss, and Farm for Profit by Tanner Winterhoff, Corey Hillebo, and David Whitaker. Themes we're going to be discussing today include the struggling farm economy, the growth of foreign agriculture equipment, the continued rise of systems-based thinking and regenerative approaches on the farm, where artificial intelligence is making its impact in ag tech, food as health and what that means for agriculture and the integration of agricultural supply chains, and then how genetics are changing the game in cattle and really every area of agriculture. Some really great thought-provoking stuff from each of these shows, and we're going to start off today with episode 411 of Damian Mason's Business of Agriculture podcast. This solo episode with Damian asks the question about what the path forward looks like in the current struggling farm economy. Damian identifies the primary problem out there with the farm economy today being the same as it was during the 1980s farm crisis: oversupply. So if that's the case, he asks and answers, where will the demand come from to catch up with this supply and improve farmers' financial situations in the future?
With the exception of eggs and beef, most everything right now is oversupplied on a global market, and prices of production are greater than actual market prices. Using the big commodities of corn, wheat, and soybeans, you're right there. Not exactly sure about rice, but I can tell you cotton. Another great example. So here's the thing. I get it. We are a global society, a global economy. We trade stuff. We produce agricultural commodities in vast sums here in the United States of America, we need trading partners. But I keep hearing this thing about, well, we're just going to have to pick up some demand and all of a sudden these prices will improve. Where's it going to come from? I've posed this question in multiple of my short videos, and I will remind you again, there's nobody on the planet right now with a wallet full of cash and a plate that's empty with no food on it. If you have the money, you have the food. We are completely oversupplied, which means then we need more demand. And that's what we keep answering, because forever, what have we done in agriculture? We've addressed the supply thing. Go to field days, like the video I shot from Tennessee. We're talking about reducing trips across the field, less diesel. We're talking about how to cut back on our fertility because we're over applying fertility. Those efficiency gains are very important, but they never address the underlying problem of stagnating demand. Lower prices will create demand. Well, kind of. So then I'm going to ask you where you think this all goes. If I'm right, I've got a couple of big predictions about where I think things go. And I'm talking not 50 years from now. I'm talking the next year or 2 or 3. We know that we have some expanding economies. That's good. The best thing we can do is to hop on with the Indonesias and Mexico. 130 million people right across the border from us with an ascending economy. More manufacturing happening in Mexico, which means more Mexican residents have more money. When they have more money, they can buy more food, buy better food, and become a better customer. Acreage adjustment. Maybe we don't need, and we're going to finally admit, we don't need 95 million acres of corn. We don't need 83.5 million acres of soybeans in the United States. And the 47 million acres of wheat, we don't really need all that either. So what happens to it? I don't know. I've put this out there before. Maybe Conservation Reserve Program expansion. Some acres could get idled. I believe, and you've heard me say this in past episodes, I believe that water will change the dynamic. If you are in an arid area in the Western Plains, if you're in California, your cost structure based on labor, water, and then environmental compliance is going to unfortunately cause you to have to make some hard decisions about your acreage. So acres will adjust, but we're talking about a pretty significant amount of acres that would need to adjust. And here's the other one that I see. The United States Department of Agriculture hasn't let farms go bankrupt at a massive scale since the 1980s. If we're pretty well oversupplied because demand just gets sort of stuck, what do we do with this stuff? So I've been posing this to my audiences. I look out over that crowd and I see a lot of people that maybe are like 36 years old. Love the fact that we have people that are 2 decades younger than me in this industry. But then I start telling them about things like the PIC program, which was 1983 and 1984, or the dairy buyout program, which was in the mid-'80s, or the CRP program, which also came about in the mid-'80s. Why do you think all of those programs were invented at almost identical times? Because of the 80s farm crisis, which was brought on singularly by excess supply on the global market. And what happened then? The government got in the business of buying up commodities to take them off the market to create demand to thereby prop up the farm sector. Government cheese. Look it up. Maybe we are never going to have a bunch of new demand or not enough new demand to satisfy all of the stuff that we have piled up in our ability to produce. And if that's the case, maybe just $100 billion tossed at the farm sector every year becomes, yeah, you know what? It's just like the reason we give money to the Pentagon. Hell, they blow $100 billion on a Saturday. What's $100 billion to keep the ag sector afloat? And the question I have then is what happens to the actual commodity? The other thing that could happen is we could end up seeing a reduction in yields as we turn more to nutrient density. So maybe we lose some production. Maybe we lose some bushels or some pounds or some efficiencies, but we make a better product, a product that actually Robert F. Kennedy Jr. would love. So that's where I see things going. I see possibly a USDA that just steps in and does even more of a backstop of ag and just tosses money literally out here at agriculture. Then they're going to figure out what they're going to do with all the stuff that we produce. I could see an adjustment in acres. I could see some hard times, but I don't think the USDA is going to do that. So what I think they're going to do is there's going to be a package. Let's remove the acres and we'll pay to do so. And that's really what they did with set aside back in the 50s. And then the CRP program, which began 40 years ago in the mid-1980s. So maybe we see something more like that.
Well, certainly some interesting ideas there about the economic path forward and how we can move from farm bailouts to maybe more market adjustments that start to even out this supply and demand imbalance. For another perspective on this topic, you might check out episode 471 of The Future of Agriculture, which was Trade Wars and the Farm Economy with Bill Ridley. Damien's argument of global oversupply is definitely a compelling one, especially in crops like corn and soy. I do think, though, the trade dynamics play a role and have a lot to do with the economics of maybe some other crops, especially some of the specialty crops that can't be grown in a lot of areas but rely really heavily on those foreign relationships for buyers. And speaking of international trade, another super interesting podcast episode this year came from Sarah Nolet and the AgTech So What podcast. Sarah interviewed Lachlan Monsborough of Rabobank about, among other things, China's rapidly developing ag machinery industry. I hadn't seen much about this elsewhere before I listened to this podcast, and I found the interview really, really fascinating. So here's a clip from the September episode with Sarah and Lachlan.
So let's talk a little bit about equipment. I think when most Australians think about machinery, it's sort of exports from like the US, maybe Europe after that, maybe like Germany, Japan. How big a player is China when it comes to ag equipment?
They're starting to become huge. The Western markets are ripe for massive disruption in terms of the price we have to pay for machinery as agricultural producers and the sort of the value that we get out of it, right? If you think that tractors are still fairly simple, apart from the bits and bobs of comfort and a bit of electronic wizardry that's put on them, right? What we're actually paying now, around $2,000 a horsepower, $1,500 to $200,000 a horsepower for the best brands, is making progression in capital equipment quite difficult. And I think the Chinese see that. They have their biggest company owned by the state. So they can arrive at pricing points for a lot longer than their competition without making a profit, without upsetting the share market, all that sort of thing. And that will mean that once they get a product of similar quality spec, we'll see the same sort of thing as we're seeing right now in the automotive market. Whether that's, Sarah, 2 years away, 5 years away, 10 years away, but I'm pretty sure it's going to happen.
Yeah, right. What just kind of, I don't know, back of the napkin market share, do you think, and how is that sort of ag equipment writ large? Do you think of it in particular sectors or?
I think just with the pricing points, it's got to be at more than 50% by 2050. So in the next generation, I can't see any other result, because you look at your standard for a dairy farmer or a livestock farmer, a cabin tractor, 100 horsepower with a front end loader, you're paying anywhere in either a European or an American or a Japanese tractor, you're paying anywhere from, let's say, 90 to 150. The Chinese here have got them here for 50 with a 5-year warranty, and they can go cheaper. And once you get over, let's say, your colour of paint loyalty and quibbles about quality, which are probably maybe more perceived than they are real, I think unless the others can meet those pricing points, I think it happens fairly quickly. We saw, I think about, let's say 20 years ago with the brands like Kubota and Kioti, so that the Asian brands from the mature markets disrupting. And we saw then that suddenly we were able to get an 80 horsepower, 90 horsepower Brazilian John Deere at a similar pricing point. Yes, you'd pay more for the American made one, but so they adjusted quite quickly. Now, whether they would adjust and meet these pricing points that the Chinese guys are operating at, that's time will tell, right?
Mm-hmm.
Surely in the boardrooms around the machinery companies in the world, this is an active conversation about how do we respond to this.
Yeah. Have you spent much time thinking about implications for ag tech, whether that's autonomy or the sort of collaborations in the digital space or new implements, like that sort of intersect with equipment manufacturers? I don't know, like China's orientation to innovation and how open that will be, like perceptions about, competitiveness, concerns?
I think it's a great question because it's going to be really interesting how it evolves. If you think of the very, very early days of auto steer, that was all aftermarket stuff. Now, how does that evolve with a Chinese tractor? Can you buy a very cheap base 200 horsepower, 250 horsepower tractor for all your spraying, tillage, etc. work and then you just chuck all the aftermarket gear on it, right? That probably comes with your implements, et cetera, et cetera. And if that's cheaper again, rather than using the brands, I see sort of huge improvements in terms of the capital allocation or the interest servicing cost for machinery there, which all speaks in favor of this disruption.
This trend of the dramatic rise in Chinese ag machinery is, like I said earlier, one I admit I hadn't been paying much attention to. Lachlan's anticipation of where this might go from here seems like it could really change the landscape of that industry and options for farmers around the world. That episode definitely aligns with a couple of the themes we've featured on the Future of Agriculture this year, including episode 455 about how China is changing the global ag trade with Ian Lahif, and episode 462, which was the History of Agriculture episode about tractor wars with Rishi Pete, which is cool to look back at what was happening in those tractor wars in the early 1900s and kind of relate that to what's happening in ag and ag tech today. But ultimately, a tractor is just a tool. And while tools are certainly going to enable change we see in agriculture from here, the future will largely be driven by economic incentives, like what Damien was talking about, and then how producers respond to those incentives. In other words, what are the thought processes applied to the farm? And that brings us to our next major theme of 2025, a systems-based approach to agronomy. And for that, our next clip comes from John Kemp's Regenerative Agriculture podcast. John's overall perspective on regenerative agriculture is to focus on the health of the plant and the health of the soil, to proactively build resilience into the system from all sorts of stressors like pests and diseases and so on. He had a great example of this approach on the Regenerative Agriculture podcast, episode 158, with farmer Erwin Westers. Here's Erwin talking about their regenerative approach to farming in the Netherlands, where they grow high-quality seed for potatoes, radishes, and wildflowers. His operation uses innovative mulching and cover cropping to enhance soil health, and he uses something that, I apologize, I'm going to butcher the pronunciation of, but you'll hear him talk about it, called Flächenrate, which is surface decomposition, reducing pests and weeds, and improving soil structure.
At that time, we were still using a lot of frost-killed cover crops with a lot of legumes. And in an organic system that doesn't want to use a lot of manure, we thought that was the wise thing to do. And he came and we said, but we have all these thistles, we have bed emergence. And it was in that time that he said, yeah, we now have this technique called Flächenrate. And for this technique, you need a lot of grasses. And we said, yeah, but we have sold our plow and the plowing is bad, you know. But in this case also, it's the how, it's not the plow, you know?
Exactly.
And he said, we have the Flächenrate now, and it is okay to plow if you do it like 15 centimeters, like 6 inches. You can inject ferments behind the plowing blades. If you drive not that fast, if you also take care that there are still enough roots in the soil, like the appendings from where the microbiology can be inoculated again. And with this, with the incorporation of grasses again, and the incorporation of specific tillage methods, we managed to finally get this crumb structure way down. Because in the first 10 years of not plowing and using a lot of cover crops, it was only about a couple of centimeters. And after these techniques, it really went down a lot.
So for our listeners who are listening to Flächenrate is, as Erwin described previously, perhaps the best translation is surface decomposition.
And we have this mulching system for potatoes, which means that for 1 hectare of potatoes, we have 1.5 hectare. You can translate that to acres, of course, of mulch growing. So we do that within our own farm. So we do not import mulch. And that means that this mulch is sown in the first half of September, and it is a rye and a vetch. And this rye and vetch will be after the next year, half of May, have bloomed and is ready to put on the potato fields, which means that it is about 2 meters or about 6 feet high, and has produced about 10 tons of dry matter biomass per hectare. So that translates to about 15 tons of dry mass per hectare on the potatoes, which create a layer of about 8 centimeters of mulching material.
How finely is that chopped?
About 2 centimeters, about an inch. Yeah, which is important because then you need less mulching material because you have a closer sheet.
Yeah, it compacts down more.
We can get back to the potatoes later, but to the field that has been harvested for mulch, it's like the donor field. As you have a donor field and a receiver field. Receiver field is potatoes in this case. Donor field is where the mulch came from. That field has been dark all spring. So every root weed that emerges there comes in dark because this rye and vetch is very dominant. Then you take it all off. We have tillage pass that is pretty aggressive. We do a shallow plowing of 15 centimeters, and then we make ridges and then we make the carrots on it. And we have seen that in that system, you can get rid of a lot of these perennial weeds in 1 or 2 years. And so that is also very effective. So this combination gives us a very good way out of these perennial weeds, so to say, which have been coming to us since we tried less plowing and a lot of cover crops that were leguminous based because we didn't want to use manure. So I think it is a heritage out of the development of this system that we had in the past. But we have to live with this heritage, and we have to find a way out of it that is not so destroying. Because if you go to the normal organic advisors, they would say you take August, and when you harvest the crop, you till the soil bare and dry until there is no moisture left, and then the thistle will die, But in that process, you will burn the last tenths of % of carbon that you have, because you will volatilize and oxidize everything that's still in there, And then the first thing that will come again in such a situation the next year is the very thing that you would want to get rid of. So I'm glad that we have found our way now. That is a life promoting system in which these perennial weeds don't have a place anymore.
The continued rise of regenerative agriculture, I think, is a trend that we will see for years and years and years to come. From my perspective, it's not about getting more people to care enough to buy regenerative products. I know many of you will disagree. That's okay. And that's not a bad thing. I hope more people do buy regenerative products and are willing to pay all sorts of premiums. But I just think it takes away from the real opportunity here, which is to focus on ideas and systems-based thought processes like Irwin's that reduce costs, build resilience, and produce higher quality outcomes. And John Kempf is, in my opinion, the best in the world at spreading these thought processes to others interested in thinking differently. As you might know, we just recently had John on the show last episode talking about artificial intelligence in regenerative agriculture, specifically their FieldLark AI that they've developed at John's company, Advancing Eco Agriculture, and about the digital clone John made of himself and his vast knowledge in regenerative ag. Artificial intelligence continues to be a huge theme and topic as it relates to the future of agriculture, which brings us to our next clip from Vani Estes and the podcast Fresh Takes on Tech. It was episode 124 that Vani hosted a conversation on artificial intelligence with actually a former guest of this podcast back on episode 345, Elliot Grant. Elliot spoke to Vani about the variety of AI applications he's seeing in ag, from breeding to marketing to supply chain efficiency. But it was this clip of one application of AI he's not that bullish on that captured my attention.
I'm not bullish on the idea there'll be humanoid robots in the future picking fruit in the field, the sort of shiny humanoids, Terminator-like, picking soft fruit. I don't think that will happen. I think, and we can come back in 5 years and see if I'm right or wrong, we'll still see humans in the field picking fruit because humans are just so incredibly good at this fine motor skill and the ability to observe fruit and deal with occlusion and deal with different environmental conditions. However, those humans will be augmented with material movement robots, maybe exoskeletons, so their posture is preserved. Maybe they're wearing augmented reality glasses, so they're capturing data from the field as they go and uploading yield forecasts. But I'm just skeptical that we're going to turn farms into factories full of shiny metal robots. So here we go. So now we have the fruit. It's in tubs, it gets into a packing line. Another AI system comes along and it inspects the fruit automatically for size and color and grade. That's relatively straightforward. And here's an example where I think we can talk about the integration of the supply chain. That data could be sent downstream to a retailer instantly to say, hey, I've got this fruit available, maybe price it or sell it instantly on the spot, or send information back to the grower to say, hey, you're picking too green. So the idea of integrating up and down the supply chain, or going all the way back to the breeder to say, this is the results we're getting from this new variety in this block. I think the opportunity is to tie the supply chain together in a way that wasn't possible. All right, and let's finish it off with the last mile, the last step of the supply chain, the marketing, which I think sometimes gets short shrift in our conversations. Let's pretend, actually it's true, that sapote has very poor shippability. That's why we don't get it in California. It's kind of mushy. I certainly don't get it in England where I am now. So imagine instead of going through the traditional supply chain, we do direct-to-consumer marketing of sapote. So we have AI bots that take the harvest information, blast out emails to people and say, hey, the sapote fruit's coming in, place your order right now. And if we get really crazy, we say, we're going to drone delivery this thing to you, and it will be there in an hour or by tomorrow morning. That would be kind of cool. I would sign up for that.
That would be very cool.
And just to finish off on that marketing question, those marketing messages that go out would be personalized to me, my health goals, my family, my language preferences, my ethnicity. The idea of sort of the one size fits all is going away. We will basically have much more customized content tied back to the specifics of that particular product. So that's a very quick view through the entire supply chain. I probably missed out a lot of things.
Yeah.
But I hope you get the feel from that AI is just going to integrate into all kinds of different parts of the produce industry. The future, I think, the winners will be those who have access to proprietary data, who can build proprietary models or some other kind of scarce resource, and who can really leverage the intuition and creativity of the humans in their workplace. Because if I really play it out and I push to the max what I think AI will do, what we're left with is the things that humans are just extremely good at, which is learning very efficiently and being creative. And I just want to touch on this learning efficiently. AI learns very inefficiently. It takes millions of data points, millions of images of a defective fruit to teach it what a defective fruit is. You could teach a 6-year-old to discriminate between defective fruit with like 2 or 3 examples. Not that you can hire 6-year-olds in quality inspection, that's not what I'm saying. But the point is, humans are just wired to learn from very sparse data. AI cannot. And the reason I mention that is domains that are very expensive to collect data will be very tough to apply AI in. And those will be the places where you can win if you're leveraging the human. So look, there's ways to win if you're leveraging AI. I think it's hard not to. But there's also ways to win by leaning into your human expertise and then augmenting that with AI.
Well, I definitely agree with what seems to be a more broad consensus that artificial intelligence will no doubt just continue to find more and more applications in agriculture and ag tech. It has come up on several episodes of FOA this year. One notable example was Devin Wright of Lumo that we featured on episode 472. One particular part of Elliot's comments there that resonated with me and connected directly with another trend we're seeing is what he said about AI integrating the supply chain. This was also the focus of the episode our next clip comes from. Joe Mosher's Pace Setter podcast hosted Andrew Holscher of Farm Strategy on episode 129. Andrew is trying to disintermediate the food system by solving for ingredient needs with better genetics rather than through food science, essentially shifting the value from food ingredient processors back to the farm. Now, this takes a great deal of supply chain integration to make it possible, but Andrew has a track record of this type of work and is very open with the challenges ahead and the opportunities that lie in overcoming those challenges.
I think the players that are in the market today need to be in the market, but information sharing between them and thus the ability to hide value, share value, that type of stuff. I thought that information was going to become easier to access. And I also thought it was going to collapse some of the margin structure that each of those businesses had. And so I just went out and interviewed a bunch of millers and bakers and found out that the flour specs that they were selling to people had dynamically different structures to them than the grain contracts they were buying. And that was an information structure to start figuring out, okay, what's that actually worth? And that led us to where we're at. Started the company in 2017, brought in partners to help grow it, execute it, all of those. I mean, currently we have Central Valley Ag, Agmark, Comark Equity. These would be some of the co-op structures. Winfield United is a part of the company. And then brought in some of the Coke Ag guys to help me, not to like destroy the system, because I think it pursued the right economic model. It's just as one model matures and potentially has some viability questions in the future, whether it's real or not, it just has some questions. I think we can start to have the conversation about the secondary model that is, well, what if I can solve food? And what is that actually worth per acre as compared to like per pound when you're having to purchase an ingredient? We're here to actually sit here and say, is this something that you're willing to start to work with and start to entertain because we think it comes in the future, right? So we don't exactly know what it looks like 20 years from now, but we do know that if we start to move this way, the only way we're going to purify that model, the only way that we're going to figure out which grain facility should take IP grain and which facility should not take IP grain, or which part of the supply chain does this genetic fit in and which part of the supply chain does a different genetic fit in, okay? We're not going to know that until we start to actually function in the market. Like some of our best relationships are people that we've had very hard conversations with, but they're bought into the idea that in the future, I want to participate in a different market than just bulk handling, scratching margins where I can from a commercial elevator side. They want to participate. They want to be a food supplier, and they're willing to partner and take risk and challenge themselves to go there. And it's not without risk and it's not without failure, but you can sit on the sideline or you can actually go, get your hands dirty and see if you can help us build something.
And this definitely goes along with what some like to refer to as food as medicine or food as health. But I think it's also more than that. What Andrew is trying to do here is to start with what food manufacturers want from their ingredients, instead of saying, well, this is what we grow, so how can we get what we grow to look more like that ingredient through this, food science, food processing. He's instead wondering, what if we can just grow differently so that what the farmer's producing is more like that ingredient the food companies want? Through genetics, production systems, segregation based on qualities, etc. It's a big undertaking, but a worthy one in my opinion, and totally different from our current commodity system. But as Andrew points out, the idea is for it to exist in addition to the commodity system and the liquidity that system provides. But anyway, be sure to check out that episode of the Pacesetter Pod. And staying on this theme of rethinking food and agriculture based on the outcomes it can provide, our next clip comes from the Modern Acre podcast. Tim and Tyler Nuss sat down with Mark Brooks on episode 418 to discuss, among other things, an article Mark wrote for AgFunder called The Quiet Trends Reshaping Ag. Mark is a venture strategist and corporate innovation leader who spent time with FMC Ventures and Syngenta Ventures and has had a board seat with several ag tech companies. One of the trends in particular that Mark pointed out I found interesting is the idea of a system that looks beyond just providing calories and starts optimizing for healthy outcomes, and what that means for entrepreneurs, corporates, investors, and really everyone in agriculture.
Now, keep in mind that the last 100 years or so of agriculture and the entire food system globally has been optimized around delivering calories. Everything has been about delivering calories, from the grower to the trades to the crop protection to this entire supply chain to the CPG companies. And that's worked out really well. It's gotten us to where we are as a society today. But it's also contributed to unhealthy trends and diets. And I think that's where you see things like Wegovy and other GLP-1 drugs coming into play, which will have a massive impact, I think, on changing the way that consumers buy food, what we buy, how much we eat, how much we consume, it changes the math on the calories. What are the calories and where do those calories come from? And so that's the trend that's like, I think everybody can recognize that is happening, and it'll affect all kinds of things from healthcare to obviously what food gets produced. And that's what I kind of get at in this in this article and in this map with this trend in particular is talking about how it will shape what crops are grown, how much of these crops are grown, how they're processed, what they're processed into. So then thinking about these three stakeholders, being the corporates, the entrepreneurs, and the investors, the map kind of gets into what should these stakeholders be thinking about with respect to that trend. So for example, for the input companies that are making the seeds and CP products, and even the CPG companies that are moving these things around the market, they need to think about shifting their product portfolios to kind of match this changing demand. Now, the demand's not going to change overnight, but the demand will change within our lifetimes, certainly. And so these input companies need to be thinking holistically about what does that shift look like and what do we within our own product portfolios need to do to be ahead of that curve and meet that demand. And then from the investor perspective, you already kind of see this happening to some extent, I think. From the venture capital and risk capital perspective, the game is, well, what kind of innovations should we be investing in from an ingredients play or a food kind of processing play that will also meet this evolving demand? And then from the entrepreneur perspective, thinking is, well, what does this mean for future diets? What innovations do I need to be creating or developing and selling and raising capital around that will facilitate this inevitable shift that's happening, or even speed it up a little bit? So again, all three of these stakeholders really have to act together.
Mark called this theme metabolic health and food demand. He had 7 others in his articles, and I really recommend you listen to that Modern Acre podcast episode. I think you'll find it really interesting. I'll put that link in the show notes. This trend of food as health aligns with one episode in particular we did this year. Back in July, we released episode 465 with Clayton Mooney of Clayton Farms, who is farming, but is really focused on creating better health outcomes for the customers of his salad restaurants. And yes, I believe it's multiple restaurants now. Started in Iowa, and I think they opened one in San Francisco. I know he was talking about it on our episode. But lettuce alone is not going to make everyone healthy, right? It's going to take some protein as well. And producing better protein more profitably is what our last clip is all about. From the guys at the Farm for Profit podcast, they hosted Vitelli CEO Carrie Ann Coker on episode 507 of their podcast. Vitelli is answering fundamental questions for beef producers, such as how much are my cattle eating and how much are they growing? In other words, what is their feed to growth ratio, which we also call feed conversion or feed efficiency. With that information, they're helping producers then make selection and breeding decisions to drastically improve feed efficiency, which of course not only improves feed efficiency, but also profitability and sustainability as well.
We see the world with what we call the triple challenge. We know we have to produce more protein. I'm sure you guys have heard this story 1,000 times, right? We need to produce more protein. We have to do it in a more sustainable way. And we have to do it in a way that producers can make money. And that triple challenge, we think is best solved with genetic progress because it's permanent and compounding. And so if we can make selection decisions or produce technology that allows us to make selection decisions like feed intake that is really resource efficient, we can drive those gains. And we brought really 2 major technologies to the market. The first one is what we call Vitelli Sense. And Vitelli Sense is our sensored feed bunks. They're hardware that we install in livestock producers' fed cattle space, where we measure individual animal feed intake, and we measure it at scale. We also have another technology that measures weight gain. So as the animal comes through the water trough, we measure individual animal weight gain every 5 seconds that they're standing at that water trough, so that we can get multiple weights throughout the day. What we deliver back to our customers on a daily basis is that individual animals' feed intake and individual animals' weight gain. And this really allows them to develop individual animal growth curves so that they can make genetic selections and identify the elite cattle to reproduce. And then secondly, our technology Vitelli Advanced is to reproduce the right ones faster. And so this is using in vitro fertilization technology to make that happen. Now, in vitro isn't new technology. It's been on the market since the 80s, and its success rate continues to get better and better. What we came to the market with was a better mousetrap. So when we have producers that use our technology, they can quickly make 20% improvement in feed efficiency in a short period of time if they're using the data for genetic selections. Feed efficiency is something that we talk about all the time. And we talk about it in tenths of differences, like a 2.2 or a 2.3 kind of situation here. I'm talking about, we'll see cattle that vary from 25 to 1 to 4 to 1.
Wow. Holy cow.
In this same cohort. So this is not a trait that we've selected for in beef cattle at all. At all. So it is a unique position for people to take on this technology as a trait that they want to market their cattle with. That's the value proposition. And really, IVF is just playing a role of getting them there faster.
Listening to that episode with Carrie Ann on Farm for Profit reminded me of one of our most popular episodes of the year, and by far my most successful YouTube video so far, which was last January when we had Jeanette Barnard guest host and interview Dr. Key Jim about business model innovation in cattle feeding. Even though beef is a very established and highly efficient business, it does still seem like there's a lot of room for innovation in cattle. Also, this hits directly on my number one answer whenever anyone asks me, what do you think will change agriculture the most in the future? Genetics. Or where do you think AI will have the biggest impact on agriculture? Genetics. Or what area of ag tech are you most bullish on? Genetics. You get the idea, and I probably should go deeper into why I believe that on a future episode, but it is certainly cool to see what Vitelli is doing to feed those genetic decisions, pardon the pun, with new data producers didn't have access to before. All right, well, that is going to do it for 2025. It's already 2026, I know, but it's only January 2nd, so cut me some slack. But that's it for this year's podcast roundup. Thank you so much to all my fellow ag podcasters who continue to put out great content and offered these insights for today's show. I'll make sure you go follow each and every one of them. That list again is Business of Agriculture, Ag Tech So What, Regenerative Agriculture Podcast, Fresh Takes on Tech, the Pacesetter Podcast, The Modern Acre, and Farm for Profit. Thanks so much for listening. I do not take it lightly. I'll be back next week with another story of ag innovation.